producing these chemicals, but without the mine. It's lower risk, lower time, lower uncertainty. We can actually regenerate exactly what needs to go back into the supply chain at a fraction of the carbon footprint. And so, my offer to Elon would be like, we will recycle all of Tesla's batteries forever for free. If you want to phone me up, hit me up. I'll even let you share in some of the profits.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. It helps us understand if this is the kind of company you want us to spend our time, money and effort on for you. And of course, do leave your comments below. That also helps us with these sorts of questions you think we should be asking, how you think we've done, and of course, what you thought of the company. You can catch this as a podcast, article, or transcript on cruxinvestor.com. And of course, for our Crux Investor Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And for more videos like this one, click the notification bell. We spoke today to Chris Reed, CEO of Neometals, and also the General Manager, Jeremy McManus. They have announced today that they've signed the JV with SMS Group, the multi-billion-dollar German conglomerate, with regards to their battery recycling project. So we speak to Chris and Jeremy with regards to how they've got there, what the terms of the contract are, and more importantly, what's the size of the opportunity and how do they capture that? Have they got enough money? And what is the runway for the next sort of 12 to 18 months in terms of moving this forward to some kind of FID, a decision on whether or not they move things forward. We also get into the kind of ESG component, the green credentials, especially off the back of Elon Musk's statement last week with regards to nickel at the front end of this, with miners saying that they need clean, green and efficient capture of nickel. This is kind of at the back end of this, which is mirror image in a way. They're trying to capture nickel and other battery metals in a clean, green and efficient way. So a lot of parallels to be drawn there. We get into the weeds a little bit, slightly longer conversation today. So take a look in the description below at some of the topics discussed. Anything interests you in particular, click on the number beside that topic. That's called a timestamp, and I'll jump you to that part of the video. Otherwise, enjoy what Chris and Jeremy have to say. Gentlemen, how are you? How are you, Chris? How are you, Jeremy?
Very well, thank you, Matt.
Good, thanks, Matt.
Well, thanks for joining us. I know it's sort of late your time, so we'll get straight into it. We've seen the press release came out this morning. This looks like pretty good news. You've actually managed to get this JV together and created a company called Primobius. Do you want to tell us a little bit about it? Maybe start at the beginning for people new to this story, and then I'll pick it up there and get into the weeds with you in a second.
Yeah, sure, Matt. Neometals is an ASX-listed project developer. Historically, we developed the Mount Marion lithium project, which is one of the world's largest sources of lithium. Immediately in 2005, after we started construction, we started looking at where in the supply chain we should be next. And all roads led to recycling. These batteries are a mix of, lithium that's been mined in Australia up to China, into Europe, cobalt that's been mined in the DRC, into China, into Europe, or into Asia, into the US. We've gone to such great lengths to combine all these materials in the battery. Surely at the end of life, there is significant value to be had by processing these and recovering the battery materials, as opposed to keep mining primary sources of ore that have got a massive carbon footprint. So, over the last 3 or 4 years, we've been developing a process. We've been scaling that up from bench scale work in Australia through continuous lab scale into a pilot plant that we ran at SGS in Canada in 2019. We finished that early in 2020. We executed a MOU with a very large German engineering group, SMS Group. Last year, they've done extensive due diligence. We've finished the pilot plant. And today is really the culmination of about 9 months of work to incorporate what will be a 50-50 joint venture to develop initially what will be Europe's largest battery recycling business.
Okay, thanks for that. Can we just talk about some of the moving parts first, before we kind of get into the detail around the deal itself. So SMS Group, I mean, who are they? You say they're a kind of big German group, but what are,
Yeah, so SMS, they've been around for almost 140 years, privately owned, more than 14,000 employees in 95 sites around the world. They are one of the largest builders of processing plants in the world, based in Germany, which for us outside of China is the largest lithium battery production hub and emerging, so a natural target. They are what we would say is a high capability partner in terms of delivering what have been successful R&D outcomes from Neometals. And, they are imminently equipped to build and operate these plants on behalf of the joint venture. They are one of the largest generators of German-backed import-export financings. So they've been around a long time, more than 3 billion euro sales last year. And I had a look in the annual report, they've got almost €1 billion cash. So, they are a very, very strong, capable group. And, they bring a lot to the transaction.
They do. And so let's talk about one of the other variables, which is the market for this. I'm trying to, I guess what I'm trying to do is work out the scale of the opportunity here and be able to get a sense of the quantum that you're going to be able to capture. So SGS, they're German. I guess that's why you've focused on the European ecosystem, because I know you've got this battery metal thematic going throughout the company, throughout Neometals. But what is it that you have been doing with them over the last 9 months, to get them through to this stage? Can you tell us, what's the diligence process? What's the problem you're trying to solve?
So essentially, you've got these batteries at the end of life, and they have a lot of base metals in them. They have lithium in them. It's hard to store them safely, and they've got very much high value in terms of the in situ metal in those batteries. So, we've had to develop a process that can deactivate those batteries. We shred them, make them safe to downstream process. And then we developed a downstream process to recover the cathode chemicals that can be reinserted back into the supply chain. And you hear about, Elon's come out and said, we need nickel, the nickel producers to produce more nickel sulfate. Okay, well, they do need more nickel sulfate, but, the nickel's going into these batteries, you can capture it out the back end, and you don't need to have big mines that make concentrates and then they get shipped to refineries around the world, and then they get made into metal, and then they get dissolved into sulfuric acid and make sulfates and then go to cathode manufacturers. We can actually regenerate exactly what needs to go back into the supply chain at a fraction of the carbon footprint of virgin mine materials. And so, my offer to Elon would be like, mate, we will recycle all of Tesla's batteries forever for free. And if you want to phone me up, hit me up, and we can. I'll even let you share in some of the profits.
That's a big offer. A big offer. Hope he's listening. You never know.
That's fine.
You never know. Hey, okay, so that's interesting. So you're saying that it's obviously you've got a much greener solution for providing nickel back into the battery cycle. But give me. Part of what I wanted to understand was the size of this market. What's the total potential size of this? What's the bit you're going to capture, and how do you do that?
Yeah, sure. So, our initial deployment, so we own a 20,000 tonne commercial scale shredding plant, so a comminution circuit. So you've got to make it safe to process. Then you have to separate out the plastics, the steel, the aluminium and copper foils. And then you're left with a black powder, or what we call a black mass. We then leach that and recover the cathode chemicals. So that's essentially the process in a nutshell, and that addresses pretty much what the market needs. It needs to process them safely, and it needs to close the loop. And so I think if we have a look at perhaps the timing of the deal, and you go back to, what have you done in the last 9 months? So what we've done is we've shown them the scoping study, the results. We've then walked them through, and they've been able to witness the pilot plant. We've wound that up. They've seen the recoveries we get. They've seen the purities that we can make. We've got the full met test work report, the mass energy balance, and it goes into the engineering studies, and the guys are comfortable. And the opportunity in terms of the size of the market. So they've deduced that we've got a process, it's technically feasible. What they've told us so far, it's economically viable. But when you overlay that, what is the opportunity into Europe? The investments in the EV sector in Europe have outweighed what has been invested in China for the last 3 years. The Chinese were there, they're bigger, but they were there earlier. Europe has been where the factories have been committed to. And so, what you found, even from the start of the year to where we see now, it's gone up to 415 gigawatt hours. It's now over 500 gigawatt hours. And when you translate that into batteries that will hit the market, and then how many batteries will come after their useful life, somewhere between 7 to 10 years, you're looking at a multi-million ton potential feed. And so initially we're going to roll out our 20,000 ton plant, and that's designed really to take the production scrap from a gigafactory, not necessarily Tesla's, but LG or any other, or indeed dealing with a car maker who gets their batteries from different sources, but initially designed to take production scrap, and then we would scale that up for the end of life application. So, it's a big market, and if you multiply a couple of million tons by the in situ value, you're well into the double-digit billions in terms of the market, and hence why for us, some might look at the transaction and say, well, look, you're giving half away, and then I would say, well, are you, or are you? You've proved the technology, it's cost you X to this point, and you got to make it a reality for your shareholders and turn it into cash. So, what is the most efficient, timeliest outcome here, which is to get someone who is perfectly capable of delivering on time and scaling up to whatever the market needs. I mean, SMS aren't in there to build a little dinky 20,000 ton plant. They are there to build multiple 200,000 ton or larger plants. That's the game. So, quality product meets all the regulatory requirements, meets the needs of the market. I mean, this is a step away, and you look, minerals and materials for a sustainable future, that way. And so, we are giving the materials for a sustainable future in a sustainable process. It's a step away from mining, but it's lower risk than mining. And so what we've done is, we've partnered with someone who can actually make our 50% worth multiples more than what we could do. Now, we could deploy this in Australia, but Australia won't be big enough for 5 to 10 years. Europe is big enough now. We can see with confidence the money that's being committed. Last month, you had the German government commit 135 billion euro to the health of the EV car makers. So all of a sudden there's 6,000 euro cash subsidy to go with the 3,000 from the producer. That's the carrot. And then they're going to invest 65 billion investing or installing 77,000 high voltage chargers in 14,000 service stations in Germany. That's 135 billion euro. That is more than my country has committed to the COVID relief for the whole country. And so this is Germany just for the EV car makers. And you've got the French who have committed 12,000 euros for every domestic. And then you've got penalties if your fleet produces more than 95 grams of CO2 per kilometre. So, you've got the carrot, and the whip just driving this transition to decarbonise transport and circular economies. And so, we started out 3 or 4 years ago. We thought this will grow into a good business, and we get into these businesses early. We were first into lithium, we were first out of lithium production, we're one of the first into large scale recycling. But what has surprised us has been the confluence of all this regulatory and ESG and circular economy and just these massive tailwinds, and these volumes they keep coming at us.
Okay, well, look, okay, nice summary, first of all. So I get it. So Europe is the right place to be, and you've got the right partner in SMS because they got the capital and connections. I understand that. You talked at the beginning about you have developed. Is this? I'm trying to then understand. Well, what are the barriers to entry for people coming in to try and capture some of this? Because and also because I understand the first mover advantage that you've got, but. Have you got proprietary technology? Have you got intellectual property? I mean, what's to stop other people coming in and talking the same game?
Yeah, sure. So, we have developed our own flow sheet. We have EU and Australian provisional patents pending. We've done the normal freedom to operate searches. And so I guess anyone that tries to follow us will be getting a nasty letter from from our lawyers. But and probably the employees. I think we've learned a lot over the last couple of years. I mean, it's called research and development for a reason. If you knew what you were doing, you wouldn't call it research and development. So I think equally as we've found a process, we've found not what to do as well. So I think, you got to be careful with these batteries. I remember early on, my chief operating officer gave me a book on lithium batteries called Can Lightning. And, if you don't shred them the right way, I think we've all seen from the press, what can happen.
Yeah.
So, safety primarily, and then recovery of value and with an eco-friendly footprint. I mean, that'd be pretty much the three sort of drivers that I would espouse that our process has.
Okay, so talking about Elon Musk's statement last week about nickel, he wanted green, efficient production of nickel, and I think some of the nickel companies, especially the sulfite guys, reacted quite positively to that. You're at the other end of the scale, but nevertheless, as important, it seems to be the story you're saying, that you're nevertheless important in terms of the total carbon footprint associated with car manufacturers, products being the car. So are you trying to, with your technology, can you claim to be the greenest battery? Because there are battery recycling companies out there. You're not the only battery recycling company out there, but are you saying you're the cleanest, or you've got scale? I mean, what's your USP?
Look, I think if you have a look, and people say recycling, and it covers a lot of business models. In Australia, people say, well, I'm battery recycling. And really what they're doing is taking the batteries, they're deactivating them, they're shredding them, and they're separating out casings, foils, plastic, and the black mass, and the black mass is going offshore. And then you can go to Europe with some of our competitors who are using traditional pyro-metallurgy routes. So they would take either the battery or the black mass and basically melt it. So, you would incinerate the graphite, which is about 50% of the mass. The plastics, the electrolyte, hydrocarbon that's bearing the lithium. And so instantaneously you're below 50% recoveries, whereas the EU battery directive's heading towards higher than 85% recovery, which is where our process is now. We're hoping it to get well into the 90s. And so, our process has higher recoveries. And I think if you have a look at, where Elon said, more efficient, and even if you go to Rob Friedland's comments last week about his high-grade copper in the Congo, which will also need to go in the batteries, he's got a 10% grade. You have to, and if you compare that to a 1% grade, say in a big bulk Chilean operation, you have to mine 10 times less ore. That has a lower footprint. And then when you put that in your processing plant, you have to process 10 times less ore to get a ton of copper. I mean, it's just arithmetic. So it then follows, if I've got a battery, the battery has the highest purity metal oxides or metal sulfates that get converted to metal oxides that you can get. So the metals that are in there were high purity. And so we're recovering. I mean, if I have a look at an Apple battery, by weight, it's 20% cobalt, right? I mean, it's got incredible value, 7,000 US a ton, a couple of ancillary stuff. I mean, that's incredible. That's, if you had a look on a gold basis, that's 3 ounces per ton, right? There's fat in it. Like, our process is not the cheapest. The cheapest would be just burning them, but it's at they then have to factor the losses in. And so, we're confident that, we have almost a future-proof process. And it's a technology. So we have to look at what the market wants in the future. They'll need to, get down to net zero carbon. And if you have a look at, okay, so you buy an internal combustion engine or a normal car with an internal combustion engine, it has a lower carbon footprint from the EV. What's different in the car? One's got a battery. Ergo, the difference is in the battery. And the battery, it's mainly materials. Otherwise, it's electricity and robots and a bit of labor. So it's in the materials where the carbon is. And so if you can recover that, recycle, recover, produce a secondary material, you massively reduce the carbon footprint. And so then all of a sudden the EV is not as far behind the internal combustion car. And so, you actually can get to what the car makers want.
Okay. That's good for me, because we've talked about some of the variables, which I needed to understand, the macro component, what it is that you're working towards, what technology you've got, and what you think you're going to be able to capture. Can we just talk about the deal then? Okay, so SMS, big company. One, why on earth would they team up with a small Australian company? And two, maybe, once you've explained that, talks about, well, how has the deal been broken down? Who gets what? Who provides what? What are both sides bringing to the table?
At a high level, Matt, the way the deal works is we've worked for years on the technology, and it's patent pending. And so there's a chemistry flow sheet there, which, we've coveted for a long time. So we bring that into the equation. And what SMS bring to the table, again, this is at a high level, but they bring the ability to help us design, build, operate, and maintain that very complex plant. And that's one of the key reasons why we're keen to partner with them, because ultimately, if you want to appeal to the world's biggest OEMs, they need some confidence that you can get this done. So having a neat technology is great, but actually having the ability to deliver, and there's lots of USPs associated with our technology, but I think really the thing that's most interesting about it is actually the business case itself, and having SMS on board is probably one of the biggest ticks, because it means this is a chance of actually happening. So in terms of how else does this deal look, we're looking to share the costs as we evaluate through building a demonstration facility in the heart of Germany. That allows, potential partners and others to touch and feel and look at this showcase, see what comes out the back end and evaluate products. We'll do a feasibility study in parallel with all of that. We will get a stronger grip than we already have on the economics. And ultimately we'll make a decision to roll this out commercially, and Europe looks like an interesting place to start doing this, but of course we need to attract the people with the feed, which we're busy doing already, and also the people who are going to buy and take, in a binding offtake sense, for us to make a decision to go ahead and build commercial plants. Okay, so but talk to me about, so what does the deal construct look like, and are you happy with the terms, or are you the smaller partner in all of this? Yeah, it took a very long time to get to this place, as you would expect with a German company. The diligence was really, really thorough. I think most people would see that as a very good thing, because no stone has been left unturned with our partners. But yeah, we're exceptionally happy with the deal. It was negotiated very hard, but I think it's certainly fair to both parties, and we see both parties bringing a lot to the table. SMS can't do this without us. We have to transfer technology. You know, we have all the insights thus far, but we really do need a presence in Europe. The networks which pull up with very big OEMs, and even just having a permitted site to demonstrate this. You know, a lot of this is probably lost on people who don't live and breathe it, but that's hard to do and super time consuming in the middle of COVID. So there's a fair bit to all of that sort of scream to us that we need to go ahead with this deal.
But so give me the terms of the deal. What's it going to cost you? What are your liabilities till you get to a point where there's an FID on whether to move forward or not? You know, have you got the money? All that sort of stuff.
Yeah, sure. I can jump in here. So look, we're very well funded. So we've got about $85 million in cash and listed investments, no debt. That's Aussie dollars. So, you know, sort of 50 million euro. In terms of the funding requirement for both SMS and Neometals through to the FID, the approved budget is 4 million euros. In terms of, you know, moving into our first deployment into Europe, you know, one of the terms of the deal was that SMS uses its best endeavours to procure its German government-backed finance. And so, you know, in terms of funding our equity contribution, we're completely able to do that off our own balance sheet with no dilution.
Okay.
So there's a seamless path in terms of activities, both technical and economic and commercial. And in terms of financing, you know, look, we could finance our entire contribution without debt, still off our own balance sheet. So, you know, we have good flexibility there. So, you know, it's roughly an 18-month funding requirement, and our chip in is 2 million euro. Obviously, all of our staff, labour time. The joint venture will acquire our full commercial scale shredding or comminution circuit, and so, you know, in terms of when we make a decision to commercialise, we can actually start up shredding and beneficiation well ahead of building a matching hydromet plant.
Okay, so let me be clear, Chris, because I want to, because we've had questions sent in and stuff. I want to be really clear. You are a project developer company, okay? Your model is to kind of fund those through to some kind of FID, but the company at that point, whether they be JVs or otherwise, will need to stand on their own 2 feet. You know, these are commercial operations which you've got with partners. It seems to be your model. You develop a flow sheet, you bring in a big partner, and then you make a decision whether to advance the project or not jointly, right? But at that point, you go to market looking for debt or equity for that entity, and that does not affect the balance sheet or the ability of Neometals to continue with this current model.
Well, we've got total flexibility. Obviously, this project is the closest to cash flow for Neometals as a combined entity, so it's more likely to stay in the group. In terms of, we would love a cash flow generating asset. We sold our last cash flow generating asset last year, but banked a lot of cash and front ended that, you know. And I think, you know, the performance of the lithium chemical prices, the spodumene price is probably a third of what it was when we sold. So that sort of vindicated that decision to sell early. And then what we've done with our, you know, extensive cash resources is we've continued to share that. We've had 5 annual dividends back to the shareholders. We've returned more than $55 million in dividends and capital returns. We're cognizant of the importance of capital, particularly as you're going into something like COVID-19. Now, they are individually set up to be self-financing and non-dilutive, if we so choose, or we can embrace it. And certainly the lithium battery recycling, we would embrace that as our first cash flow assets. In terms of the other projects, they all have strong partners. They are all co-funded through the final stages of evaluation into FIDs. And we have complete flexibility whether they move in or out of the group. We can give them back to the shareholders via an in-specie distribution. We can separately list them, raise capital, raise debt. I think, having such a strong balance sheet and no debt and a pipeline of projects that you're getting to FIDs at, end of 21, 22, 23, 24, there is a pipeline of projects. I mean, obviously we can't fund all of them off the balance sheet, but, the highest return with the lowest capital investment is going to get the first nod.
Okay. So again, sorry to dig down on this one, but again, we've just had so much feedback from the market. You have been dishing out dividends, right? You did one recently. Yep. It was a big distribution, right? Your shareholders are probably happy, you would expect, but some of them come back and said, are these guys cognizant of the fact that we perhaps would rather have the security of knowing that the next project is going to get done than have dividends? I mean, that's a big group of people out of the shareholders going, keep your money, Chris. I want you to get this deal over the line. So what are the discussions at board level around, how you manage the capital?
It goes through a very comprehensive process, very highly experienced board. And we are very cognizant of what dilution costs to get projects. We are also aware of our weighted average cost of capital. We are also aware that if you do not have an immediate need, if you're getting up to it and you're going to make the FID, it's different. But these projects are advanced, but they're still in the final stages. So you have to have an equal balance. It is the shareholders' cash. If I have not got a plan to deploy all of it, and we've given that over a 5-year period, so clearly we haven't had the investments that have needed to be made, and we have taken the decision to return that cash to its rightful owners, which is the shareholders, unless you've got a better use.
Okay.
Right? Like if I can't earn my weighted average cost of capital, or if I think my cost of dilution for an event coming up, then I shouldn't pay it out. But we do go through a very detailed process.
Okay. Do you think that this whole ESG movement is getting more traction now? I know you've been at it 2-3 years. You guys spotted it 2-3 years ago and segued the business over, right? So great. Was there any point at which you're going, crikey, I'm not sure people going to pick up on this thematic, other than just a sort of nod to doing things the right way?
I think it's probably just caught up. I think, look, my family's been involved in the mining industry for more than 100 years. So, and look, we have developed precious metal mines. We've done industrial metals mines. We've explored for base metals. The thematic in there. So, for us, the thematic of minerals and materials for a sustainable future then defines the commodities that you should target. And then you have a look at, okay, well, if I was going to get this out of minerals, what are the trends? And so if I have a look at just general minerals projects around the world, the grades are getting lower and they're getting deeper. Ergo, the mining costs per unit of output are going up. And unless you can work out a way to actually change the physical location of your ore body, enrich it and make it closer to the surface, that trend is immutable. So for us, we thought, well, the only way is really that we can level the playing field is to try to innovate on the processing side. And hence, we had a look at recycling, and then we've had a look at vanadium recovery through some, and from a background, our background has been in minerals. We were in lithium minerals, lithium chemicals, and this is just the next progression. It is producing these chemicals, but without the mine. And so it's lower risk, lower time, lower uncertainty. And hence, we know what's in the batteries when we process them. With perhaps the vanadium recovery project, we know what the vanadium grade is in the slag. It's the exceptional grade. And if you do your studies right, and we are diligent in our studies, you really, if you've got the grades, the feed grades right, you shouldn't have massive fluctuations in your operating costs. Where a lot of these projects go wrong is in the mining. Everyone wants them a certain size, and you've got to do your evaluation studies in a certain period of time. And we cut corners, and the results vary a long way away from these feasibility studies. But essentially, they rush the front bit, and we don't rush the front bit. We want to get it right. And we want to get it right, and we want to bring in big partners. We want to get the highest return on capital in the shortest period of time. The board and management are the biggest shareholders in the company, and we want to make our money and share it with our shareholders.
Okay, so tell me this.
That's what we do.
Okay, I buy that. At some point, you're going to need to raise some capital. So it's all well and good, Tesla saying, give me green, efficient, name the commodity, right? A battery commodity. Lithium, nickel, whatever, and it's all well and good. Your conversations with automotive manufacturers saying we need to address our carbon footprint. But when it comes down to raising the money, do you think that the funds care? Are they going to give you extra attention because you've kind of got a greener solution? Do you think you're going to be able to raise the capital based on the economics you're going to be able to achieve?
Well, whether or not they're green or not, none of these green funds like losing money, and neither would we. So, you'll find in the discount rates we use, I think, for the battery recycling, we use a 12% discount rate. I mean, we are here to get these projects built. We're not trying to coddle them to get some outcome in a market. If we need to go and raise the money, we will. We've never had, and we have raised equity and debt, probably in the order of 180 to 200 million bucks over the life of the company, over various projects, and always paid our debt back. I mean, I think, if you do what you say you're going to do what you say you were going to do with the money, and you're open and transparent, I can't see any reason why we wouldn't be able to. I mean, we haven't done it for a while. We haven't raised money for 7 or 8 years, but that's not to say that, I mean, that's good, I would have thought.
Well, it is good, but that's what I mean. At some point, you're going to need to go to market, presumably in Oz or over in Europe.
We're not scared of that. I mean, if you have a look at the portfolio, our shareholders have 4 projects. Now, if I give it back to them in an in-specie distribution and say, you have this, you can either put more money in it. If you don't want to put more money in it, we have to bring in new money and some debt. You still own the same amount as if I kept it in the head company and did the same thing, right? But you don't want to dilute 4 projects. So, you want to keep your best projects, right? And the ones that have the tightest strategic focus. And, there's nothing wrong. I mean, just because we've got a big portfolio, I can return those back to the shareholders. We could do spin outs. You could do any number of corporate finance moves on it. Okay,
so at what point? I know you said you're going to be doing a feasibility study for this project going forward, and you get a better sense of the economics and costs and so forth, efficiencies. What's the timing of all of that? Because if I look at your business as a whole, I think people go, certainly feedback we get, these are smart guys. They're good operators. They're efficient operators, and they're straight talking. What they're trying to do is get a line of sight and go, well, how do I start to quantify or value or evaluate these 4 projects coming down the line? I know 21, 22, 23, 24, it's great, but what do they equate to? Are you going to be able to start giving us and sharing with us those sorts of numbers going forward? If so,
yeah,
when?
Absolutely. I mean, we have 4 advanced projects. They are in feasibility and then moving into feed. So, these studies take 12 or 18 months, and then they just land. So they're designed to land as we need them to. But, you've essentially will have feasibility studies landing and then moving into feeds for some of the projects, but you'll have them landing sequentially. So, we go through a disciplined process of scoping, pre-feasibility, feasibility, and then front-end engineering and design. We don't cut corners.
I know you don't.
So
but
yeah,
help me with the numbers.
we will be able to put metrics into the market, and if I'm spending the shareholders' money, I need to tell them why. I need to tell them what the risks and rewards are, and they need to know that, because they need to know whether. And I might put it in another company, and I might ask them to put more money in, and they have a choice whether to or not. But they need to understand the risks and the rewards. So we go, to some length to share that with them. Okay.
So when can we expect you to start adding a bit more colour to, these sequence of projects?
Oh, so look, we could certainly provide a consolidated timeline for the various projects to you. I mean, there's over a long period on a quarterly basis, there's quite a lot of events. But for the battery recycling, you'll have a class 4, class 3 study. Now, what we might do is, when I said we will share the risks and rewards, we'll tell you what the operating and capital costs are. We might not tell you exactly what the financial model looks like, because there often there's some commercial in confidence elements about that. It's not like if you've got a mine. If you've got a mine and you open the mine, you can be completely transparent about everything, right? Because no one's going to come in and take it off your hands. But this is a technology where I've got to go in and I've got to compete. And so, I don't want to tell the wider market anything that might prejudice the actual success of the business. So, I think people will have to just bear with us then. But to suffice to say, we have put out a scoping study that's got enough data in there where you can work out a financial model, you can work out the operating costs. We've given you the capital costs, we've given the assumptions on the battery mix, the pricing assumptions, and an educated analyst could come up with a number that's probably 5% with what our management model looks like. In terms of what the pilot plant told us, we surpassed our expectations. So you can have a look at the scoping study and hold those going forward with some confidence.
No, I understand that. And it's like, you've got to also understand that why I've got to ask, because, as a kind of retail family office investor, we need to get a sense of those numbers. Look, my comfort comes from someone like SGS, multi-billion-dollar operation, doesn't go and do a deal with a small Aussie company if it doesn't think it's going to make a lot of money. Okay, so I get that. And I also get that there's enough data around to be able to create some kind of crude model about what the opportunity is. But I just, you as an ex-miner...
And for our other projects, from the vanadium recovery, the lithium refinery, and Barrambie, we are more explicit. So, for the vanadium recovery project, we put out a scoping study last quarter. We'll put out the pre-feasibility mid next year. We'll put out the final feasibility mid the following year. We'll make an investment decision, and then you'll have a timeline. So for the traditional projects where there's a known feedstock source secured, I'm happy lifting the skirt, so to speak. The battery recycling one, I do need to be a little careful. It's a bit like Mount Marion. We developed, what is the world's second largest source of hard rock lithium units. We published a resource. We never published a reserve, and we never published results of any feasibility study, because we were negotiating with the Chinese. Only one country buys spodumene. That's China. The last thing you can do is tell them your costs.
Yeah, no.
If I'm trying to go into the EV market in Europe, these guys love beating suppliers up. I don't want to tell them everything.
I get it. I understand. I was just interested, having been you as an ex-miner, have you transitioned through that way of thinking? You clearly have. Great catch up, Chris. Great story, and well done on the JV. I'm excited to hear what happens next.
So demonstration plant starting up in the new year in the center of Germany at one of SMS's production facilities. The procurement activities are highly advanced. We'll start construction probably towards the end of September as the European summer starts to wind down and everyone gets back into the swing of things, and do the demonstration plan in the March quarter. We'll then do the engineering and feasibility and commercial activities in parallel, and it's come Christmas next year, it's hopefully be good times.
Beautiful. Okay, Chris, I appreciate the update. Jeremy, thanks so much, mate. Good to speak to both of you. As always, pick up the phone when there's some new news if you don't mind. Thank you.
Excellent. You have a fantastic day.